advanced auditing assurance, it's all about application. In other words, you're going to apply the knowledge that you have acquired during your studies. Are you following on what I'm saying?
Yes.
Are you following?
Yeah.
Yes, it's about application of the knowledge. It's about application of the knowledge. Especially, that's why I was asking that you did SBR, FR, SBL, and other subjects. They're very important when you're doing AAA. Because you as an auditor, you're going to audit different facets of the organization. Probably you may give in HR department, probably give a scenario, something to do with production. What is happening in the production? You see, so you must have a vast knowledge for you to provide a competent service or to answer, so that you may meet the requirements or what is being expected by the examiner. Are we together?
Yes.
So it's about application. Nothing wrong to have so many notes, in whatever different forms they are held. But what is very important? What is very important? Are you able to apply those notes? When you have, let's say you are giving a scenario, are you able to identify something from the scenario and apply the necessary stuff, essential materials, in response to the scenario that you are given? You are welcome, Kudzai. How are you?
I'm alright. Sorry I'm late. The work commitments were a bit hectic.
That's fine. How was your day and how is your life?
Otherwise, Zimbabwe busy.
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 Yes, naturally, life in fact getting busy.
Family we're busy. So good.
Okay, we are on the introduction. So far, I'm talking about AAA. What is AAA exactly? So I was saying, when you're doing AAA, we are going to apply the knowledge that you've acquired during your studies. Are we together? And there are some subjects that are very crucial, that are very essential when you're doing AAA, regardless that you have passed them or not. Good example, SBR, FR, SBO. Yes, they are very, 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 very important. Especially the accounting standards. Especially what? It doesn't mean that they're going to ask you to tell us about IAS 16 proper parent. No. We're going to apply the provision of those accounting standards in response to the scenario. So you must be prepared. Yes, so I'm sure most of you guys, you do have probably so many notes from different sources. But my worry is, are you able to apply those notes? Then the other thing, which is very, 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 very important, and which seems to be difficult to most of the students. When you are speaking, when you are writing, yes, we must identify. We must hear. We must be able to identify if when you're writing, whatever you're writing is something to do with auditing. We have to identify. No, these words are from the practitioner. Remember, in audit, is a professional accountant. These are words, yes, are from the This person is a professional accountant. All together.
Yes.
Hello? Yes, you have to speak, you have to write like a professional accountant. So in that area, guys, I'm sure pacheza opa my assignments, we're going to mark it's an area chinge tichipolishana papati no here. Use all the technologies, use all the buzzwords. Express yourself like a practitioner, a professional accountant. And please, the other thing that I want to warn you guys, you have to be serious from the word go. You have to be what? If you want to make your life easier, you have to be serious from the word go. You get what I'm saying?
Yes.
That's good. I forgot to ask you, Kuze, are you doing this subject for the first time or?
Yes, this is my first time doing advanced audit. Yeah, I'm doing advanced audit in combination with SBR for the first time.
That's good. That's good. Like what I've mentioned earlier on, that SBR is one of the subject which is key, essential. Isn't it? You're not doing triple A. That's good. Right. Let us get into today's business. Let us get into it. So today we're going to look at the code of ethics and conduct, as well as the governance. Governance, isn't it? So you may write. You may write. Code of ethics for professional accountants. Code of ethics for professional accountants. Code of ethics for professional accountants. So when we're talking about a code of ethics, we are talking about a guide, a guide of principles. We're talking about what? A guide of principles designed to help professionals conduct business honestly and with integrity. When we are talking about a code of ethics, we are simply talking about a guide of principles designed to help professionals conduct business honestly and with integrity. Any question on that? Hello?
None from me.
What about others? Sorry, I wanted to ask, have you circulated any notes or maybe I missed, you circulated notes earlier on for advanced audit?
No, not yet.
Oh, okay, that's fine.
Okay, not yet. So that's the code. When I talk about the code of ethics, we're talking about a guide of principles designed to help professionals conduct business honestly and with integrity. Simple as that. Then I've asked any question that's simple definition so far. Which means, in other words, we're saying the code of ethics are principles based. Are what? In other words, we're saying the code of ethics are principles based. are principles based. So now let us look on the fundamental principles in the Code of Ethics for Professionals. Right? So there are 5 fundamental principles in the Code of Ethics for Professionals. There are 5 fundamental principles. There are 5 fundamental principles in the Code of Ethics and Conduct. That's good. And what are they? Someone can try. What are they? What are these principles? I've said there are 5 fundamental principles. What are these fundamental principles? Someone want to try? Okay, objectivity. That's good. That's good. What else? Integrity. That's good. That's good. What else? So we do have another okay, we mentioned integrate professional competence in the UK. We do have what we call confidentiality. We do have what we call professional behavior. So, number 1, integrate. Integrate. So when I'm talking about integrate, we are saying professional accountants. Use a professional accountant. You must be straightforward. You must be honest or true in all business and other professional relationships. Are we together? You know what? Business and other professional relationships must be straightforward, honest, or true. So we're talking about integrate. Yes, someone has mentioned about your objectivity. Objectivity, we are saying the professional accountant, you as a professional accountant, you should not allow bias or conflict of interest. In other words, you should be fair. Whenever you're carrying out your assignments, you should not allow bias or conflicts of interest. In other words, we're talking about fairness, objectivity. Are you following what I'm saying?
Yes, sir.
Another fundamental principle, confidentiality. Confidentiality. So when we're talking about confidentiality, we're simply saying professional accountants. Remember, the moment I say professional accountant, I'm simply referring to you guys, simply referring to the auditors. Yes, you should respect the confidentiality of the information. You should respect the confidentiality of the information. You should respect the confidentiality of the information. So, you're only allowed to disclose certain information, or in others, yes, you're only allowed, or you may disclose certain information. That is, if you're allowed to do so. Yes, let me express my point that way. You may disclose certain information. That is if you're allowed to do so by the client. Client, don't forget a client is the firm. We're talking about the audit client, the firm that we are providing in audit service. True, isn't it? That's a client. By the client, or you're allowed to do so by your profession. Does the ACA Code of Ethics allow you to disclose it information? If yes, you may disclose that information. Again, you only disclose the information that is if you are also allowed by legislation or regulations governing that particular industry. Am I clear there?
Yes.
That's good. All right. What's next? Professional behavior. Professional behavior is another fundamental principle in the Code of Ethics for professional behavior. So when we talk about professional behavior, in other words, you have to comply. We're talking about compliance. Complying with rules, regulations, and legislation, corporate governance principles, so that you may not discredit the profession, so that you may not discredit what? So that you may not discredit the profession. That's what we call professional behavior. For you to expound professionalism, obvious, there are certain rules that you have to follow, that you have to obey. Fifth one, last, isn't it? Number 5, talking about another fundamental principle, professional competence and due care. Professional competence and due care. Professional competence and due care. Can someone tell us about professional competence and due care? When I talk about professional competence and due care, we are saying professional accountants, they've got a duty to maintain professional knowledge. Yes, you have got a duty to maintain professional knowledge and skill. Professional accountants, they have got a duty to maintain professional knowledge and skill. And skill. How do you maintain a professional knowledge and skill? How? You must be usually, in others will say, you must be a member of a certain professional board, isn't it? If you are a member of a certain professional board, you'll be aware of current changes in your profession. You'll be aware of current developments in practice, in legislation, in whatever area, covering your area. So if you are competent, automatically we say there's no doubt that you can be able to provide a competent or an expert service to the client or to your employer. So you say professional comedy due care. So for you to to act diligently. For you, we're talking about Juke. For you to act diligently, you should be aware, or you should follow. You should follow the provisions of the ISAS standards. ISAS, yes, International Standards and Auditing Standards. IFRS and other regulations governing your profession. Whenever you are providing a service, you should follow. Because failure to do that, there's a danger of performing your professional service with gross negligence. In other words, the company may sue you, or the client may sue you, saying you are performing the service with the gross negligence. Why? Because you are not following the international auditing. You are not following probably.
How you should exercise Juke.
All right. Saga. It's fine. All right, Juke. We're talking about Juke. I was saying, for you as a professional accountant, to act due diligently. In other words, you have to perform your professional service in accordance with ISAS, which means the National Standards and Auditing Standards, in accordance with IFRS, the National Financial Reporting Standards. It is just giving an example. Are you following what I'm saying?
Yes.
Yes, that's good. So these are the 5 fundamental principles in the what? In the Code of Ethics and Conduct. In the Code of Ethics and Conduct. That's good. Can you proceed? Hello?
Yes, we can proceed.
That's good. It's fine. Then say, am I right? You must skip a line, then say. They are threats to compliance. They are threats to compliance with the fundamental principles. They are threats to compliance with the fundamental principles. They are threats to compliance with the fundamental principles. So in other words, we're saying, in trying to comply with these fundamental principles, there are some threats. There's some threats that may affect you as an auditor or professional accountant in trying to comply with what? With the fundamental principles in the Code of Ethics and Conduct. And what? And these threats are classified as, and these threats are classified as, number 1, we do have what's called self-interest threats. Self what? Interest threats. Self-interest threat. Are you writing? Number 1, do you have what's called self-interest threat? Are you writing?
Yes.
Yes. Number 2, we do have what we call, first you're going to list, first let us list them. Yes, I said there are 5 sources of threat. So for us to say self-interest threat, which means it's a source of threat. So there are so many good examples or circumstances that may be referred as self-interest threats. So first, let us name or list these sources of threat. Number one, self-interest threat. Number two, self-review threat. Self-review threats. Number three, advocacy. Another threat to compliance with the fundamental principle. Number four, familiarity. Familiarity threat. Familiarity threat. Number five, intimidation threat. So these are the 5 sources of threats. These are 5 sources of threats. Are you following? Are you following what I'm saying? Nyasha,
Yes.
are we together? That's good. It's fine. Then say.
Yeah.
Then say. The auditor must identify these threats. The auditor must identify these threats to independence and objectivity. The auditor must identify these threats to independence and objectivity. That's first point. Then second essay. Evaluate the significance of the threats identified. Evaluate the significance of the threats identified. If I say evaluate the significance, you have to quantify, you have to assess, isn't it? Evaluate, which means you have to assess the significance of the threats identified. Then lastly, after you have assessed the significance, you have to apply safeguards. You have to apply safeguards. You have to apply safeguards. You have to apply, you have to apply the appropriate safeguards. Yes, you have to apply the appropriate safeguards. You have to apply the appropriate safeguards. Either to eliminate the threats or to reduce them to an acceptable level So the word safeguard simply means management of threats, isn't it? Simply means what? Management of threats. Simply means management of threats. Any question so far? Hello? Then see, we are still on safeguards. Then see, there are 2 general categories of safeguard. Safeguard, which simply means management of threats to independence and objectivity. Management of what? Of threats to independence and objectivity. So there are 2 general categories of safeguards. There are 2 general categories of safeguards. There are 2 general categories of safeguard. So the first category, number one, they are safeguards created by the profession. They are safeguards created by the profession. Corporate governance regulations. Corporate governance regulations. CPD. CPD simply means continuing professional development requirements. Continuing professional development requirements, CPD. Professional standards, etc. Just to mention a few. That's first category, safeguard created by the profession. Corporate governance regulations, continuing professional development requirements, etc. Then number two, second category, there are safeguards in the work environment. There are safeguards in the work environment. Work environment. What are these safeguards? For example, just to give you a clue. Good example, having policies and procedures in place. Having policies and procedures in place to monitor to encourage or to encourage and empower staff to encourage and empower staff to communicate any issue relating to compliance, with the fundamental principles that concerns them, to communicate an issue relating to compliance with the fundamental principles that concerns them. The other examples, another example under that one, probably consulting an independent third parties. The safeguard by consulting an independent third party. For example, you may consult other professional accountants in some areas that you are not good, or in some area that you are not probably understand during your auditing. You may consult other professional accountants, or else you may engage other people like valuers to provide independent valuation. So etc. So these examples are not exhaustive, but just to guide you. So these are two categories of safeguards. Any question? Hello?
No questions so far.
What about others? Okay. If there's no question, say how much would in a one. So you may skip now. Now let us look on those. First, I've given you sources. Now we're going into detail. Exactly good examples of self-interest threat. What are good examples of self-revealed threat? What are good examples of familiarity, intimidation, advocacy, and stuff. So you may write. Subhead, they say circumstances that may appear. So you may write circumstances that may appear. Circumstances that may appear to undermine or jeopardize. Circumstances that may appear to undermine or jeopardize independence and objectivity. Independence and objectivity. Are we together? Independence and objectivity. Are we together? That's called in brackets, which I'm simply referring to threats to independence. Threats what? Threats to independence. I'm simply referring to threats to independence. So guys, there are so many circumstances, but we're not going to discuss all of them. No. Others are going to read them. I'm going to share probably the textbook and stuff. But I'm going to expound some of them so that you may have a clue. Okay, when you are reading this, that's what are the possible safeguards. So in exam, you'll be given a scenario. You must be able to identify these threats to independence and objectivity. Usually be given different circumstances that may jeopardize your independence, as well as what? Being objective. I mean objectivity. So let us discuss some of them. Number one, temporary staff assignments. Temporary staff assignments. Temporary staff assignments. Temporary staff assignments. What am I saying if I say temporary staff assignments? So probably sometimes it happens that the audit client may request us to provide our staff or to loan our staff for a short period of time. Are you following what I'm saying? The moment that I say us, which means I'm referring us as auditors, is a firm of chartered accounting. Yes, the staff may be loaned to an audit client, but that's no circumstances. It creates self-interest threat. You have to write temporary staff assignments. Audit team members may be loaned to an audit client, may be loaned to an audit client for a short period of time But this creates a self-interest threat. but this creates a self-employed threat. Why? Because there's a risk of the audit staff ending up assume management responsibilities. Ending up assuming management responsibilities. If I say assume management responsibility, I'm referring to directing or supervising the activities of the work. These are a good example of management responsibilities. Directing and supervising the activities. Or the work. Am I loud and clear on that?
Clear, sir.
What about Nyasha and Yvonne?
It's clear.
Really?
Yes.
So, listen, when I say Pandu Express and Chitanya, the reasons why I consider as a threat in what sense? So you have to know what are the possible safeguards. I remember earlier on we just discussed about the two categories of safeguards. And what are they? First category is about what?
Safeguards created by the profession.
And the second category?
Safeguards in the work environment.
That's good. But now, when you answer now, you have to be specific. These are the categories. So under each category, there are so many examples of safeguards in the work environment. You see. So, but when you are suggesting a possible safeguard, please pay attention to detail. The scenario. It's not a matter just of writing a safeguard. The safeguard that you are proposing, is it appropriate to the circumstances? There are so many possible safeguards under this one, but is it most appropriate to the circumstances? So there are so many possible safeguards. Possible safeguards in this case, remember, I've said safeguards simply means management of what? Of threats. Yes, the simple safeguard. How best can you manage this threat? The launch staff should not be included in the audit team altogether. The launch staff should not be included in the audit team. Yes. Just to give you an example. That's how best we can safeguard. Because the moment that we are going to include those staff in the audit team, they're going to review their own work. Already they got some interests. They are not going to probably to if there's some issues on the work that they have performed, they'll be silent. They would be what? Silent. So that's why that I think that one Akambo was in data capturing or to perform some temporary assignment, probably to my cash payments, my receipts. Also in the auditor. Kana pane ma errors akaitika. They know automatically akuna munhu anoita data dzabasa. They will be quiet during the audit. Audit some auditors. So That's not the best thing that we can do. These loan staff should not be included in the audit team. Can we proceed? Hello?
Yes.
Yes. Right. We do have sometimes it happens that when you're auditing a client, the audit client may give us some gifts. There's some hospitality, provision of canteen. When talking about hospitality, some gifts probably may be given. Sometimes we may be given. Sometimes our audit engagement partner may be asked by the audit client to go for a holiday. All those kind of things, it happens. But bear in mind that there's some potential threats to independence. There's a what? So am I right? Gifts and hospitality. Gifts and hospitality. Gifts and hospitality. Gifts and what? Yes, gifts and hospitality. So examples I was mentioning when we talk about gifts and hospitality, we're talking about provision of canteen, isn't it? Are you writing, guys? Attending year-end parties. Yes, the client may ask us or require us to attend their year-end parties, part of hospitality, or giving some hampers, or probably our audit engagement partner may be asked to go probably for the holiday, and the audit client is the one who is going to meet those expenses. Yes, but listen. Full stop. We are just giving a good example of gifts and hospitality. Who's to then say? We should only accept such goods and services. We should only accept such goods and services if the value is clearly trivial. If the value is clearly what? Is clearly trivial or minimal. That's called. Is a safeguard. And another point, these goods or these gifts or hospitality should be approved, and it should be approved by who? By the senior member in the audit firm who is the audit engagement partner. They should be approved first by the audit engagement partner and properly documented. Whether we have accepted them or not, they should be properly documented. Whether we have accepted the goods or the services, whether we have accepted or not the goods or services, they should be properly documented. Are you following on what I'm saying, guys?
Yes.
Yes, I'm just giving you a scenario of my examples so that you'll be familiar with these things. That's good. Then say financial, another one, simple line, then say financial assistance. Financial what? Assistance is another circumstance. Okay, goods in hospitality may create this one gifts in hospitality. They create both self-interest threat and familiarity threat. In what sense? Why I'm saying familiarity threat? Because by attending my year-end parties or by going to the holiday, some relationships may develop, isn't it? Some relationships may develop. So one circumstance may fall under different, probably under two or more sources of threat. Don't be surprised when you are reading from the textbooks. Are we together? A circumstance may fall under different or under two or more sources of threat. Are you following what I'm saying? Hello?
Yes, we're following.
Yeah, that's good. Then see? We're not talking about financial services. We're talking about loans, obtaining loans. You have to write obtaining loans and the guarantees from the audit client. Is it obtaining what? Loans and guarantees from the audit client. From the audit client. Please, in exam, make sure that you're able to identify these circumstances and apply appropriate safeguards. That's good. That's good. Then say right, fine. Listen very careful when it comes to my loans and guarantees. You are not allowed, we are not allowed as auditors to obtain loans and guarantees from a non-financial institution. Are we together? That's rule number one. We are not allowed to obtain loans and guarantees from a non-financial institution. I'm sure that you're writing. We are not allowed. We are not allowed. We are not allowed to obtain loans guarantee from a non-financial institution. Full stop. Then continuation. They say. If it's a lending institution or financial institution, if it's a lending or financial institution, the loans should be obtained the loans and guarantees should be obtained on a normal commercial terms. They should be obtained on a normal commercial terms. Yeah, so under this circumstance is that It's a self-interest rate, a self-interest rate, or this may create a self-interest rate. If you obtain a loan or guarantee, even regardless that is a lending or not institution, this creates a self-interest rate. So how best can we safeguard that one? Already we've mentioned that these loans, they must be provided on a normal commercial terms. What does the word normal commercial terms mean, Yvonne? Yvonne? What does the word normal commercial terms mean?
The terms should be the same to what is provided to the other clients.
That's good. That's good. That's good, isn't it? Yes. So how best can we safeguard this situation? An independent review is required. An independent review is required. An independent review is required. By a partner from another office in the firm. By a partner from another office in the firm. By a partner from another office in the firm. Right. Valuation services. You have to write the valuation services. Valuation services. Valuation service. So the client may ask us to do some, probably to value the shares, their shares, or to value certain, probably, or to make assumptions regarding future development. So usually this value, after we did the provide that services, the amount will be included in the financial statement that we are going to audit. So a self-review threat may arise. A self-what? Review threat may arise because we are the ones who are going to review those financial statements. And again, we are the ones who did valuation services. That's good. Are you following on what I'm saying?
Yes.
Yes, a self-review threat may arise. So listen, according to the Code of Ethics and Conduct, please, we are not allowed to provide evaluation services on matters which will be material to the financial statements. All together. On matters which will be material to the financial statements. That's good. They say if the matter will be immaterial. If the matter will be immaterial, the following safeguards may apply. The following safeguards may apply. The following safeguards may apply. We may use separate personnel, isn't it? Separate teams for the valuation in the audit. We may use separate audit teams for the valuation in the audit. We may use separate audit team for the valuation in the audit. Or else you have to an independent review is required as well. An independent review is required by the different partner. Isn't it? Or by the other partner, within the firm, but from different office. Within the firm, but from different office. Independent review, etc. Any question? Any question?
Nothing so far.
Nothing. So regarding my examples last, and not in your essay. So we are just highlighting, discussing a few. When you are reading exactly what you're supposed to know, it's not about just reading. So you have to write another one. Long association of another circumstance. Long association of a senior personnel with audit clients. Long association of senior personnel with audit clients. Yes, long association of a senior personnel. When talking about senior personnel, talking about audit, yes, audit engagement partners, senior audit managers. They say this may create a familiarity threat to independence. This may create a familiarity threat to independence. That's good. Then say, for public interest entities, for public interest entities, for public interest entities. What does the word public interest entities mean? Can someone define? What is a public interest entity?
An entity whose activities affect the citizens of the country.
Okay. Someone? Wonder about public interest entities. You are simply referring to the listed companies, isn't it? And other companies that are not listed. For example, insurance companies, banks, because they deal with the general public directly. Altogether. So when I talk about public interest entity, so in exam, please you have to identify the client. The client, is it a public interest entity or not, so that you may apply appropriate safeguards. I'm sure you've read that one. You may write exam focus point. Exam focus point. So if you're given a scenario, the first thing, identify the client. Is it a public interest entity or not? Why? Because so that apply appropriate safeguards. For sometimes they are different. Usually the rules for public interest entities are stricter than the rules for a non-public interest altogether. The rules for public interest entities are stricter than the rules for non-public interest entities. So please, from the introduction, quickly identify the client. Is it a public interest entity or not? Because some of the safeguards that apply to non-public interest entity, they do not apply to public interest entity. I'll keep you on repeating that one. Some safeguards apply to non-public interest entities. They do not apply to public interest entities. Why? Because of the rules. The rules for public interest entities are stricter. Are you following on what I'm saying? So the codes, they say, if the audit partner is associated with the audit client for 7 years, has been associated with what? Or is an audit partner for 7 years, must be rotated off the audit. They must be rotated off the audit.
Sorry, so you said the audit manager.
Audit partner.
The audit partner.
Is a partner for 7 years, isn't it? Must be rotated off the audit. For how long? For a cooling off period of 2 years. Cooling, COOL, for a cooling off period. For a cooling off period of 2 years. Yes, but of course you may extend to 8 years. Why? That's if there's some special circumstances. A good example, the incoming engagement partner becomes seriously ill, isn't it? Yes, you may extend the period to 8 years, it's allowed. But scrutinize the circumstance before you apply the safeguard or before you comment. Make sure that you have scrutinized the circumstances. Why this partner, this period or her period has been extended to 8 years. Common sense is very important when you're doing auditing, please, guys. It's another thing that you have to contribute in your studies. Of course, you do have the notes and stuff, but your common sense given this scenario. What's the conclusion? That's why my question verbs at this stage, they say comment, analyze. Mostly want to hear your side. Your common sense. Of course, you're applying the notes, but you give the scenario on the ground. Your common sense. somebody say, no, they've said it is 2 years, but here there's a genuine reason why they've extended to 8 years. So we need people who use common sense. We need people who think out of the box. So the other safeguards that we should have a regular, independent, internal or external quality reviews of the engagement, isn't it? A regular, independent, internal or external quality reviews. So there are so many different circumstances. So if you're given an assignment, please go and read. If you want to understand the textbook or the notes, you better understand them. That is if you are given a question. Are you together, guys? Because next time when we meet, the first thing we're going to do is the question on threats. I'm going to send this question paper in advance so that you may read your notes, identify these circumstances. So this one here, what does it say? Okay, so here, when I'm writing, you have to do this. So that we're going to do it together, but I'm going to send the question paper in advance so that you may read your notes. Are we in agreement? Here we revise as we go. Seriously, guys.
Yes, sir.
Are we together? Kuna surprise. Not 2 weeks before the exam, I'm not able to even to answer the question. I don't know how to answer. No. Here we revise as we go. Or be sure some people say, when are you starting with the revisions? Already, we were revising already. Now, the last month, they were polishing up, not revising side. We'll be polishing up. But this month, it's for teaching how to do this, so that next month, that's when I'm going to start to give in assignments on topics that we've already covered. So, guys, these exams, they're not exhaustive, but just to guide you, isn't it? There are so many family and personal relationships, etc. There are so many exams, but we cannot claim them, but read so that we may understand. Don't forget what I've said. I said, when you are given a scenario, the first thing, identify the client. Is it a public interest entity or not? Why? To avoid a scenario whereby you may end up applying inappropriate safeguards. Are we together?
Yes, sir.
Thank you very much. So you may write another new topic. Let us discuss about corporate governance. Corporate governance. Corporate governance. Corporate governance. Yeah, nowadays it's a hot topic, isn't it? Am I lying? Corporate governance is a hot topic in the world, not only in Zimbabwe, but in the world. Hot topic. What is corporate governance?
Corporate governance are the regulations and rules the organization is directed by to ensure stakeholder interests are guarded.
Okay. Others, what are you saying about corporate governance? Tell me. Corporate governance. You know what? When I talk about corporate governance, we are looking. We're talking about the system by which companies are directed and controlled. All together. So corporate governance is the system by which companies are directed and controlled. It's just a reminder for those who did SBL or other professions. For those who did even corporate governance, we're just applying, just reminding you. So, one thing about the corporate governance was, in other words, we are saying is this. That's how basic definition is the system by which companies are directed and controlled. In the past, far back in time, the directors of the company have got a tendency of paying themselves hefty salaries at the expense of the shareholders, at the expense of the company. Are you following on what I'm saying? They were window dressing accounts, aggressive accounting. So they were so serious malpractices in the company, deferring some expenses, early recognition of revenue, and talking about window dressing of account or aggressive accounting. So the issue of corporate governance, or the issue of having codes of corporate governance, Can someone tell us or just give an example of a code of corporate governance that you know? A code of corporate governance. They are also known as codes of best practice. What are they? Yes. You want to try? You may try. Naja, Yvonne? Ella? Okay. Oh, who's there?
The Sir Kingsley Code of Corporate Governance, I think.
Yes, sorry, come again.
I think it's called the Sir Kingsley.
King. Yes, King 3 report, and it's a code of what? Zim code. Why are you running away? Zim code. Did you have our Zim code? It's a code of corporate governance, which was enacted into law. UK corporate governance code. Cadbury corporate governance code. Greenberg. All these are codes of best practice. They have been drafted in order to balance the interests of the owners and the directors. The owners, which means the principal. In other words, they have been drafted in order to solve principal agents' problems. Principal what? Agents' problems. The principals are the shareholders, and the agents are the directors who have been trusted by the owners to run the affairs of the business on their behalf. Are we together? Yes. So these codes of best practice, they've addressed so many issues. So in exam, you must be able to apply these codes of best practice. You may be asked to identify, to evaluate the business risks. So make sure that where there's a corporate governance weakness, you have to identify it and address how best that situation can be addressed. You're going to simply refer from the codes of best practice, not from your head, from the codes of best practice. Which means you must bear in your mind the provisions of these codes of best practice. They are not all provisions that are essential in our studies, but they, I'm sure, primary criticals. Transition. Yes. So did you write corporate governance is the system by which companies are directed and controlled? Did you write that one? Hello? Hello, guys.
Yes, I've written that point.
Yes, okay, it's fine. So I may say we do have so many codes of best practice. Do you name them? UK Corporate Governance Code. Another example, we do have what called ZIM code. You have what called Greenberry code, Cadbury code, etc. They are also known as the codes of best practice. They are also known as codes of best practice. So the main purpose of these codes of best practice is to solve the principal urgent problem. To solve what? Usually there are some potential for conflicts of interest between management and shareholders. That's the purpose of these codes. So let us look on the, I'm going to use probably so many different scenarios, but a good example, according to UK Corporate Governance Code, I'm going to use that one as an example. UK Corporate Governance Code, according to UK Corporate Governance Code, so this code has prescribed how best, no, how to come up if you want to build a board of directors in terms of the terms of the number, the composition of the board. How do we build or come out with a effective board of directors? So this code of directors have suggested or has prescribed some areas or things that must be followed when you are setting up a board of directors for the board to be effective, to be balanced. So you may write number one. What do the UK Corporate Governance Code? Number one, what the board of directors, BOD. Number one, the board of directors, BOD. This one. Hello?
Yes, I'm there.
Yes. They say the board, you have to say, the board of directors should have sufficient number of The board of directors should have sufficient number of non-executive directors. Non-executive directors. In bracket, that is IE. In brackets, IE. That is brackets IE. That is at least half of the board should be staffed by independent non-executive director. At least half of the board should be staffed by independent non-executive directors. Full stop. We are still discussing about the board of directors. The other provision under that one board of directors, that again, the board should be balanced in terms of gender, comma, the board should be balanced in terms of the gender, comma, qualifications, age, race, etc. So in other words, we need different qualifications in the board. Are we together? Yes, we need different qualifications in the board. We need different ages in the board for succession planning. Another principle under that board that have been prescribed by UK corporate governance code, that the board has collective responsibility, which means the board should work as a whole. The board has collective responsibility, which means a small kitchen cabinet of directors is not allowed in the board, or the chairman should not dominate the board's decisions, or a small group of directors should not dominate the board's decision. They must work as a whole. The board has collective responsibility. Are you following on what I'm saying, guys? Hello?
Yes, for following.
Yes, all those things are going to apply when you're given a scenario in exam. They're not going to ask you what are the principles of UK corporate governance code. No. Never ever expect such simple things. Are you able to apply the knowledge? We just write the board of this client is like this, and then the finance director, group finance is proposed ABCD. But no. This what this group finance is saying is against the principles of the UK corporate governance code, or is against the principles of Surveillance of Act, against whatever codes of best practice that we're going to refer. Another issue, we are still on the board. The chairman of the board, should be independent on appointment. Should be independent on appointment. This one should be an independent person on appointment. And again, should not dominate the board's decision. And should not dominate the board's decisions. Remember, the chairman of the board is the leader of the board. We are still on the board of directors. The other thing which is very important under that board of directors is that the roles of the chairman and the CEO, which means the chief executive officer. The roles of the chairman and of the chief executive officer, they should be clearly defined. They should be separated. And why? Why they should be separated? Why? Nyash, are you there? Yvonne, are you there?
Yes, just have internet challenges. So
Okay.
yeah.
What's that? Why the roles of the chairman of the board and the chief executive officer? Remember, the chief executive officer, CEO, is the leader of the executive directors, and the chairman is the leader of the board. Why they have to be separated? Why they have to be clearly defined?
If you don't mind me asking, what is the difference between the CEO and the chairman of the board?
Okay, let me repeat it again. The chairman of the board is the leader of the board, and the chairman is a non-executive director.
Okay.
Chief executive officer is the executive director and is the leader of, is a member of the board, but is the leader of the executive directors. Thank you for asking that question. The purpose of having non-executive directors is that they're included on the board so that they may challenge the views of the executive directors, but based on a mutual understanding. Are we together? That's why good corporate governance have prescribed, or the codes of best practice, they have prescribed that you should have sufficient number of non-executive directors on the board so that they may challenge the views of the executive directors, but based on a mutual understanding. Am I loud and clear there, Kuza?
Yes, sir.
That's good. So there's a confusion usually if their roles are not clearly defined. The CEO, usually they'll tell that I know everything here. I'm the someone who is involved into day-to-day running of the business. Remember, the executive directors are involved into day-to-day running of the business. I know everything. Then the chairman is not involved. Non-executive directors or non-executive directors are not involved into day-to-day running of the business. So usually, practically, the chairman, the CEO, usually there's something like kudera na uribo. The CEO say, I know we know nothing about this company. You chairman. Chairman say, I know I'm the leader of the board. That's good. Then the other thing is it's about the chairman so the CEO of the company should not become the chairman of the board of the same company. Not become the chairman of the board of the same company. So which means if the CEO retired, they have to wait for a reasonable period of time. I'm sure they have to wait probably some corporate government, they said at least 3 years before you come back to perform the duties of the chairman of the board. Some they say 5 years. So I'm sure a sufficient number of time period is required. At least 2 to 3 years is fine. least, which is minimum years required. One, remember I've mentioned earlier on that the chairman on appointment should meet an independent criteria. Should meet what? Or should be someone who is independent. Be an independent person. That's good. Let us go on to discuss about remuneration.
There's point 2 under corporate governance.
Yes, we are done with the board of directors. Let's discuss about remuneration. Fine, let's see. According to yes, Greenberg Corporate Governance Code, or even UK Corporate Governance Code, the levels of remuneration should be sufficient to attract. The levels of remuneration should be sufficient to attract. Levels of remuneration should be sufficient to attract, comma, retain and motivate, comma, retain and motivate. Attract, retain and motivate directors of the quality. Directors of the quality. Directors of the quality required to run the company successfully. Required to run the company successfully. Required to run the company successfully. Am I clear there? Am I clear there?
Yes, sir.
That's good. And then you have to write that we're still on remuneration. A significant proportion of executive directors. A significant proportion of executive directors' remuneration. A significant proportion of executive directors' remuneration. A significant proportion of executive directors' remuneration should be structured so as to link rewards to corporate and individual performance. Should be
Sorry.
Yes.
Sorry, so as to link?
Yes, to link rewards. Rewards simply means remuneration or remuneration to corporate and individual performance. To link rewards to corporate and individual performance. In other words, we are simply saying a company should avoid paying more than is necessary for what is necessary. Are we together? That's what I'm trying to explain, to make it clear. A company should avoid paying more than is necessary. So that's why I say a significant proportion of the executive directors should be structured in such a way that is going to be linked to corporate and individual performance, so that a company should not pay more than is necessary. Any question on that? Hello?
Sir.
We are still on remuneration. It's a very area which is very important. The other thing on remuneration that remuneration package of executive directors, remuneration package remuneration package or emoluments, whatever we call them, emoluments, should be decided by the remuneration committee. Decided by the remuneration committee. Should be decided by the remuneration committee. By the remuneration committee. A remuneration committee is a subcommittee board. Altogether, a remuneration committee is a subcommittee board. Is a subcommittee board. And what is the composition of remuneration committee is that this subcommittee board should have should be staffed by 3 independent non-executive directors. Should be staffed by 3 independent non-executive directors. That's good. That's good. Then you have to write NB under remuneration, they say. No individual director is allowed to be involved. No individual director is allowed to be involved in negotiations of their remuneration packs or rewards. In negotiations of their remuneration packs or rewards. That's good. So, who decide the remuneration we're still on remuneration of independent of non-executive directors. So, remuneration of independent non-executive directors is decided by the board as a whole and approved by the shareholders altogether. Remuneration of non-executive directors is decided by the board as a whole and approved by the shareholders, which means the owners. Which means the owners. That's good. And another thing under that's remuneration of non-executive that their remuneration should not be linked or should not be linked or should not be pay related. That's a good example. It should not be linked or they should not be pay related. Or they should not be participate in executive share option schemes. Executive share option schemes. They should not participate in executive share option schemes. Even bonus schemes of the company. Why is this would impair their independence? Why is this would impair their independence? Any question on that?
No questions?
That's good. We do have another subcommittee board, which is very important, what you call audit committee. Audit committee board. This committee again is very important. Audit committee board. So its composition again should be staffed by 3 independent non-executive directors. Should be staffed by what? By 3 independent non-executive directors. Should be staffed by 3 independent non-executive directors, and at least one of them, okay, should have recent and relevant financial experience. Should have what? Recent and relevant financial experience. Why this committee should at least one member should have recent and relevant financial experience? Audit committee. Right? Why? Yvonne, you want to try? Why? Yeah, sure. Why? This committee should have one member with recent and relevant financial experience. Yes, is there? Why?
In order to allow the member to be able to run the affairs of the audit committee.
What is the purpose of this committee?
To ensure that the financial policies and controls are being adhered to.
Okay. But so okay, they say financial oversight. The main purpose of this audit committee is yes, there are so many different functions of this committee. To review the financial statements prior to approval by the board, to review the financial controls, the other operating controls, and to make sure that they are robust and defensible, isn't it? To assess the independence of external auditors, and annually to see if there is any need of having internal audit function, and to report that annually. So there are so many functions of the audit committee. So how can for this committee to be to perform their roles effectively, we need someone with recent relevant financial experience. But they're going to implement financial robust, financial controls, operating controls, risk assessment, etc. Are we together? That's good. That's all main roles, function of this committee. Right. Again, in corporate governance, we do what we have nominations committee. Nominations what? It's a subcommittee board again. Nominations committee.
All right, is that point number 4?
It's another subcommittee board. These are subsidiary boards, and assist the main board for it to function effectively and efficiently.
All right, can we put the nominations committee as point 4?
Oh, I don't know how you are numbering it, but It's a subcommittee board again, like audit committee, like remunerations committee. I don't know how you're numbering it, but the main issue is that it's a subcommittee board. So no, the main purpose, again, the composition of the nominations committee should be staffed by 3 independent non-executive directors. So all in all, you have noticed that all subcommittee boards, they are fully staffed or furnished by independent non-executive directors, isn't it? The composition. One of the purpose of this board is to consider the potential directors to be appointed to the main board, isn't it? To consider the potential directors to be appointed to the main board. The purpose for recruitment purpose. For recruiting potential directors, isn't it? That's the purpose of the nominations committee board. And again, we need someone with the HR, skills, knowledge, human resources knowledge, and selection, teach all those kind of things, so that it provides or performs service effectively. Again, any question? Then we do have what you call listing rules. What do you call what? You may skip and they say listing rules. Listing rules. What does that word mean? Listing rules. What does that word mean? Listing rules. Hmm? Sorry, come on, louder. I'm not hearing you properly.
The rules that a company that wants to be placed on the stock exchange has to comply with first, and also to maintain that that listing. Those are the rules that you need to comply with.
That's good. That's good. That's good. That's good. So in exam, usually most students they get confused when they talk about this one. The company is seeking for quotation. It wants to be listed. It's there or go in the next 5 years. They want to be listed and stuff. They will be talking about corporate governance. They're talking about audit committee composition. They'll be talking about internal audit function, the number where they are reporting all those kind of things. So they want you to they're testing you that are you aware of the listing rules? Are you aware of the corporate governance provisions, the good corporate governance, etc. So listing rules are like this. Well, of course, they do apply they apply to companies that are already listed or companies that are seeking flotation. Flotation. What do they do? What does the word flotation mean? What does the word flotation mean? What does the word flotation mean?
Offering the company shares to the public.
For those companies who want to be listed or to sell their shares to the general public, is it flotation, isn't it? So they apply for. So if you are seeking flotation, let us start by discussing. If a company is seeking flotation, if a company is seeking flotation, they have to submit audited financial statement for the past 5 years, isn't it? They have to submit. Where? Good example in Zimbabwe, we're talking about the Zimbabwe Stock Exchange. All those financial statements, they need to be submitted. They need them. They have to submit audited financial statement of at least, yes, some corporate governance code, they say at least 3 years. For the listing, they say at least 3, which means yes, 5. Some they say 5 is fine, still fine. And again, you have to, on a submission, you have to clearly state which corporate governance code that you are following, that you are applying. Nowadays, you have to state which corporate governance code that you are following. Are you following on what I'm saying? Again, for you to be listed, again, you should start to follow or to apply good corporate governance practices. You should already started to apply good corporate governance practice. Example, if you're talking about, you should clearly state that you do have all those your board of directors is balanced in terms of the number of NEDs and EDs, which is non-executive director and executive director in terms of different qualifications, etc. You have to clearly state foot again that you do have subcommittee board like audit committee and other those that we mentioned earlier on. And those boards again, they are independent, are fully furnished by independent non-executive directors. You must clearly state that you do have internal audit function, which is independent. And that internal audit function is reporting to the audit committee. You should demonstrate, is it reporting, who decide their work? These are good corporate governance practices. Guys, are you following on what I'm saying? Hello?
Yes.
Are you following? Zoti exams kwanza uzi-apply here.
Yes, following.
Say this something here, okay, I've noticed something. Oh, that's good. That's good if you are following. That's good. So these are some of the things, listing requirements when you are seeking flotation. If you want to trade your shares on this stock exchange for the first time, you must know the listing rules. Otherwise, you may be failure to. Let's say you have been listed already, your shares are floated. Failure to comply, continuous compliance, they simply deregister you, delisting. You'll be delisted, in fact. You'll be what? Delisted for non-compliance. Failure to comply with the listing rules once you have been listed, the boards or the stock exchange, they simply deregister you and you into a company. Yes. So continuous compliance is like good example. You keep on informing them about the changes. Good example, if there's some change in directors, they need to be notified. You have to notify the boards, which means simply referring the Zimbabwe Stock Exchange or London Stock Exchange. If you change, probably you've appointed other auditors, you have to notify them. There are certain forms that you have to fill, then to notify them. There are so many changes. Even the company sector change. If you have changed the company sector, they need to be informed. If you want to company name, they need to be informed. No doubt, continuous compliance, isn't it? Rules that need to be followed. Madzidza, it would be like a story, so chitotaura sana. Chasikana chiti munhu akabata textbook ositanga kuti say I'm not getting the sense. I don't know where I'm coming from and where I'm going. I'm totally lost. So in an exam, we'll be given a scenario. They'll some maybe you'll be there. They'll be telling you about the intention of the company. What are their goals? Good example. I've said sometimes their goal in the next in the next 5 years or 3 years, they want to be listed. So what do you think? And yet they're telling you about poor board composition. Yet they're telling you about a small internal audit function which is reporting to the executive director, finance director, which means there's lack of independence. But the internal audit function must be independent. How best can we enhance the internal audit function? Remember, the internal auditors are the employees of the company altogether. We do have external audit and internal auditors. My internal auditors, my employees of the company. So their independence is questionable. But there are ways that we can enhance their independence. What are these ways that we can apply to enhance independence of internal auditors? Ndapia. Yes, another way, they have to report to an independent board, an audit committee board, isn't it? That's good. Reporting structure. Another way of enhancing their independence is by they should decide they should decide their work without any influence from the executive directors. They should decide their work without any influence from the executive directors. That's good. Another way of enhancing their independence is by outsourcing the internal audit function. Yes, it's another way of enhancing the independence. We can outsource the function. Another way of enhancing the independence of internal audit function, the head of internal audit function must be appointed by the audit committee. And again, the other way of enhancing their independence, they must be rotated on after a reasonable period of time, isn't it? Auditing, accounts is there. We are trying to enhance their independence. We are trying to enhance their independence. Guys, I'm sure for today I can say it's enough. We are done with this. Next time when we meet, we are going to look we're going to find the question of ethics question, yes, ethics, and then we go on to quality control. Then we will do quality control. So I'm going to look for the question paper. I will send it in time so that when you're reading your notes, please start to read now. Seriously. Please start reading. Just imagine today's Friday until next week Friday. Say I didn't open the book, I don't have time. Try by all means to avoid such excuses. In this universe, I'm sure we do not have time, but we are the one who creates time. So you may conclude by writing this statement. They say nowadays, you are required, especially on listed nowadays or on those public interest entities, they are required to they are now required to, I'm referring to those public interest entities, they are required to state in the annual report, to state the provisions of the corporate governance code that they were following, and the provision the corporate governance the provisions, yes, that they were not following, and why they did not apply. What the provision that you did apply, or those that you did not apply, why? Now it's a prerequisite. You have to state in your annual report. Here is state. Referring to public interest entities, they are required to state in the annual report. The directors of the company are required to state which the code of best practice that you are following, and which provisions that have been applied, and which provision that have not been that you did not apply, and why. In your annual report, you should state that. Now, part of good corporate governance, because the shareholder, they must know, the certain thing that must be disclosed to interested parties, mainly the shareholders, the creditors, the staff. So, guys, yes, you may remove your or you may unmute yourself. I'm sure for today it's enough. So I may say good night. Please, watanga kuerenga time is now. Patoni ma questions njetoatumira muchaona say ma questions andikutuma this question paper ndotifana kuerenga in advance muchiverenga ma notes ana semuerenge chi chakutumira materials ekuerenga, but please uerengai kuti zvisazokuremere kumberi sezvandowandira. And you have to pray for laziness, to say, God, please, that spirit of laziness, I have to rebuke that spirit of laziness. So, cheers, guys, and say good night.
All right, thank you.
Okay, sharp.
Thank you.
Enjoy your dinner. That is if mom is going to lesson.